Ladies and gentlemen, welcome. This is Christopher. It is the 31st of January, very late in the evening, so you'll probably see this on Monday morning. And welcome to iGold Advisor. If you are new to this channel, I am producing these videos to share some of the things that I've learned about precious metals and investing in the sector. I have noticed that there are two major groups of people who have come to this channel. I've received a lot of emails from people over the last few weeks who are interested in some more aggressive styles of investing. And so what I've seen is those two groups comprise, number one, the long-term investors, the stackers, if you want to call them that, who want to accumulate metal on a regular basis. And for those people, that's really the primary purpose of this channel, is to provide some of the fundamentals and also to look at the price action so we can have a better idea of perhaps when to buy, perhaps when short-term tops may be forming in the market so we can be better prepared and more confident. For the other group, I have decided that the best way for me to move forward is to create a sub-channel. It's going to focus on some of the more aggressive forms of investing that I do and that I've done in the past and that I've been successful with. And this is going to include some of the investing in the mining companies, as well as some of the real technical analysis, getting down and dirty with the nitty-gritty of the technical analysis. And that is going to include things such as how I do charting, trending, Japanese candlestick analysis, a whole lot of other ratio analysis, relative strength, a lot of the things that I use to go about this process. So I haven't started that channel yet. That will be coming. Watch for that. I'll probably make an announcement about that in the next week. And again, that's going to be so that I can make a video once a week or once every 10 days for those group of people that want to learn more about that side of things, but so that I don't dilute the main videos that I'm trying to produce here, because I do believe that it is very important for individuals to be accumulating physical precious metals for the long run. Absolutely. And for certain individuals, that is the best thing. For certain individuals, they have a higher reward and risk tolerance, and they're looking to really hit a home run perhaps over the next couple years that could change their options in life, for example, and that channel is going to be for them. If you are interested in that channel, here's what I need you to do. I've written a 35-page report. It's on my website. It's for free. It's basically a summary of all of the research that I've done on the mining sector up to this point. And the reason why I would like you to read that, if you are interested in this, is twofold. One, so we can be on the same level, and so people can be at the same backdrop for where I'm coming from as regards to this research. And the second is because I want you to see how much research goes into this type of work. I will be launching a premium service. I already have some premium reports that are on my website. I'm going to be launching a premium service for people that want to do this more aggressive style of investing in the future. You don't have to subscribe to that. You can follow the new channel that I start, but it's a lot of information. And so in this report, it goes over all of the metrics, all of the type of research that I do, so you can get up to speed and kind of understand where I'm coming from as I launch my service over the next month or so. That said, we're going to get right into it right now, and we're going to look at the Indian rupee price of gold. The Indian market is fascinating. If you're from the United States or a Western country and you don't understand why, this is going to show you just quickly about that. But the Indian market is critical to understanding the overall gold market. So we're going to get right into that. I'm going to close the video so I can focus on the charts, and I'll be with you by voice. So let's get right into it. By the way, if I failed to mention this, the link to that free report will be in the box below. So we're looking at gold in India before we get to the US action. And here's a picture from a traditional Indian wedding gown, I believe. If anyone is in India and can tell me that this is not a traditional wedding gown, please do let me know. But I believe this is how they prepare for their wedding season, which happens in the fall. And the thing to note here is look at the amount of gold that this woman is wearing on her body. She must have several ounces of gold here just on her neck, and then there's some in her earrings and on these chains. It's just incredible. Now, I have never traveled through India, but I've traveled extensively through the Middle East, and I have seen this kind of thing at airports and at other places where you see people from India traveling. They wear their gold on their body. They wear their savings on their body to a certain extent greater than the United States. And where is the proof of that? Just look at the consumption of gold in India compared to the United States. Almost a five-fold increase in gold consumption. So we think, here in the United States, we think that we dominate the gold market and it's all about the Federal Reserve and, other Western countries buying and selling. But when we really stop and take a look at this, a major component of the gold market is dominated by India. So there is a culture there that is much more ingrained with gold ownership. Now, of course, this applies to China as well to a certain extent. Let's move along and look at, for example, the amount of gold that has ever been mined in the history of mankind, including all the gold sitting in everyone's house, all of the gold in central banks, all of the gold that is being worn on individuals in India and in other countries, all of the gold that was lost at the bottom of the ocean from ships. It could all fit into a box this size, 20 meters squared, rather 20 meters cubed. And here we have, for reference, you can see a little human figure. So it's not that much gold, right? It's a very rare mineral in the grand scheme of things. Of that gold, nearly half of it is in the form of jewelry. So we like to think that we are dominating the market again by buying and selling gold and gold contracts, for example, but a significant portion of this is in jewelry. And let's just remember that in India, that jewelry component is really overlaid with savings. Because from what I've seen and what I've read, Indians save by jewelry. So whereas we might save it in this form, this jewelry component is not purely for ornamental use. So I just think this is very important for us to remember as we look at the price action in various currencies. We're looking right now at the US dollar versus the Indian rupee, not a cross-currency that is often discussed. But it's very interesting to look at here. Basically, you can see over the course of about a decade and a half from the late 90s through the early 2010s, the rupee traded in a range between 39 and 49 per US dollar. And then something happened here in 2011 where the Indian rupee sank relative to the US dollar, right? Because this is the number required to buy one US dollar. So as this is moving higher, we see weakness in the rupee. So we can see we're in a very steep trend line here my analysis would indicate that this level here at 68 is going to break. This looks like a very bullish pattern here as far as the US dollar strength is concerned. We would probably see over the course of the next couple of years the Indian rupee weaken to somewhere around 80 per US dollar. So how has that affected the price of gold? I regret that I cannot show my usual charts. My data service does not provide the Indian rupee price of gold. So we have to look at this chart, but it's okay, we can make do. Here in red, we are looking at the US dollar price of gold for the last 10 years. And here in blue, we're looking at the Indian rupee price of gold. So keep in mind, for those 5 times more importation of gold by Indians, these are the prices that they're having to deal with. So what we see here is the price is basically mirrored through 2011, and then that was that point at which the Indian rupee really fell relative to the dollar. And so what happened? Indians turned to gold to preserve their purchasing power. So it's an interesting example if something like that were to happen to one of the major currencies, to see how when a currency really weakens, the price of gold serves to hold the value, the purchasing power. We can see that here as the price of the Indian rupee gold has basically held right here at this black line, right around 70,000 per ounce. This looks like very strong support. And if we are indeed forming a bottom here in the US dollar price of gold during 2016, which is my expectation, it would give me a strong indication that we're going to be moving higher in Indian rupee gold. And it won't take that much longer. The price of US dollar gold will not need to exceed its former all-time high at 1900 for the Indian rupee price to exceed its former all-time high. Indian rupee gold will break through first, so we'll be watching that. If I was to draw some sort of a trend line here on the upper region, it's not pretty looking, but the best I can make of it is that there is sort of a reverse curve here happening for the highs. Yes, you had this spike through that level, but it was quickly negated, and you've sort of had a series of highs coming down, and these highs look like they are stopping their downward progression. I would expect that the highs are going to start rounding out, although it still may take another 5 years or so to break this price on the Indian rupee gold. So, little international perspective for us, and let's return to the US dollar gold price. Looking at the action through Friday, not a whole lot to report. Consolidation over the last couple days since the Fed non-decision on Wednesday. For those new people who have found their way here, this is for you. I want to remind you that gold hit a high in 1980 at $850 an ounce and then consolidated below that level for 29 years and then broke out in 2009 and is currently coming back into the vicinity of that 850 breakout zone. From a long-term perspective, that represents a market that is retesting a multi-decade breakout. And that's a very powerful pattern when you're looking at it from a long-term perspective. It still includes, when we zoom this in, it still includes, for those who are new, the possibility of a move into this green zone, as far as my analysis shows. And you'll note that I had this level drawn here a while ago, and it certainly has bounced just about right at that level. So that was an important technical level. And we'll be watching to see if on any retest this level holds. If it does not hold, the next support level that I'm looking at is right around 990, followed by some of these other support levels here that I've talked about many times in the past. So just to look at that, to keep in mind that as we look at gold here over the 6-month time frame, we are looking at the possibility of that low being put into place right now. We're talking about that this may have been the low. Of course, this being the GLD fund, which I'm not recommending that you own, it just gives me a nice ability to do these 6-month charts. And so what can we see here? Well, we had this lower line of the uptrend, and wouldn't you know it, the bounce back from Wednesday gave us a nice parallel trend line here as shown in the teal color. So we have a nice well-defined channel now, and we want to see this channel hold if this low is going to become more significant. So I would expect the price of gold to respect this channel for the short term, and let's see how long this channel and how high that can lead. Looking at the gold miners, which we always do, even in this main channel, just for perspective, we see that we are approaching another hit of this significant multi-year downtrend. And guys, that's why I'm starting the new channel. That's why I'm going to be launching my premium service. It's because I've been following this pattern for years, and I'm waiting. So it may not break out yet, but that breakout is coming from a valuation standpoint that is a multi-decade low. And as contrarian investors, we want to be buying things that are at multi-decade lows, not things that are at multi-decade highs. Looking at silver, gold's cousin, which is often more volatile, which often lags, and then often plays catch-up with a vengeance when it's ready to. So you just need to understand those dynamics. We had a bit of a drop on Thursday. Where did that drop correspond to? We'll look at that in a second. The long-term perspective for silver, for anyone who's new, just keep in mind, silver is still below its 1980 high. This is the critical takeaway. It's still below its 1980 high, meaning it's about 10 years behind gold as far as breaking above its 1980 high. And it will do so at some point, and that's going to be that catch-up move that we're talking about. Right now, we're zooming in on the lows. We're trying to determine when the low has been formed. We have a lot of relative strength indicators that we're looking at. We have linear trend line indicators. We have volume indicators. We have waves of new investors that seem to be entering the market every 2 to 3 years, and this next one looks like it's going to follow a Fibonacci pattern and perhaps be 5 years that the next wave starts from the previous wave. So silver represents a very interesting long-term possibility, but you have to be prepared for that volatility. So when we were looking at the back off in the price from Thursday, that drop of about 25 cents, here as we're looking at the 6-month chart, can you see why I draw these lines, for example, in certain places, and how as the price of silver got right up to within a few cents of this line, boom, it fell back down. So what does that mean for the long run? Not a whole lot. But in the short run, for people that do like to follow this kind of thing, of which I am one, I like to pay attention to these patterns, and I like to gauge and get the feel of the market. And so this level here, which is the SLV fund, which corresponded to $14.50 on the spot price, is our horizontal resistance right now. We need to see that level broken before we can talk about this being a possibility of the final low. Just looking quickly at the silver mining side, there was an astute viewer who noticed a short-term inverse head and shoulders pattern here on the price of silver Wheaton. That was a good observation. That looks like it broke to the upside on Friday. You can see that spike higher. That gives us a target right around here. If you do the measuring for this inverse head and shoulders pattern, gives us a target right around here of 1250, which corresponds perfectly with this downtrend that's been in place for the last 3 months. So we'll have another attempt on that, and of course this will be an early indicator for the price of silver if it breaks that downtrend we're watching. So, thank you very much for joining me. Have a nice Sunday evening, or if it's Monday for you already, have a nice start to the week, and I will see you on Wednesday.